Hey guys, what's going on? Thank you so much for clicking on this video. So last month, I made a video giving you my opinion on travel-related stocks such as cruise lines and airlines. And that video ended up being my most popular video, getting over 500 views and doubling my subscriber count. So this video will be a follow-up to that video, and there are a lot of updates to discuss since I made that last video. But first, make sure to subscribe if you have not done so already. This channel is growing fast, guys, and I don't want you to miss out on any of the great content that I put out there, all for you. So in today's video, we will look at 3 factors for deciding if and when you should buy cruise line stocks such as Carnival, Royal Caribbean, and Norwegian cruise lines, and the most likely outcomes for where the stock prices will be later in the year, 3 to 6 months from now. In my previous video, I talked about how cruise lines would be one of the last industries to resume operations after all of this coronavirus pandemic stuff has passed. Shortly after I filmed that video, the CDC issued a no-sale order that was originally only supposed to last 30 days. But like I had predicted, the 30 days has come and gone, and the no-sale order is still in effect. In fact, if we go to the CDC's website, we can see that the no-sale order has been put in place until July 24th, unless government officials decide that it can be lifted earlier, which is unlikely. So let's discuss the factors you need to consider when deciding on whether you should buy shares of cruise line stocks, and then we will get into 3 investing strategies you can choose from based on your risk tolerance and investment time frame. So the first and most important factor that needs to be addressed is when will cruise lines be able to resume full-scale operations? This is the most important question to answer, and it's the most important for obvious reasons, because no customers means no revenue. As we have seen so far, it appears that the CDC can change the no-sale order as they see fit. So even though right now it looks like cruise stocks will be able to begin operations again starting in August, who knows when the CDC will actually allow them to resume full operations. On top of that, the resuming of operations will be in phases, so it will take additional time for the cruise lines to get back to full operational capacity, which again means lower revenue. Also, there will most likely be increased downtime in between voyages and extra costs associated with the new cleaning procedures that they will most likely have to implement. I estimate that cruise ships will be back to full-scale operations sometime in the next 6 to 12 months. And I know 12 months seems a little excessive, but this is where I will go ahead and talk about a wild card factor that needs to be accounted for. And that is, what if the coronavirus comes back and cruise lines have to shut down again or reduce their operations? Unfortunately, this is a very real possibility. Researchers in New Mexico have already identified 14 mutations of the virus, and one of them is even more contagious than the original Wuhan virus. Sorry, I don't know if I'm actually allowed to say Wuhan virus, but I only have 88 subscribers, so it's not like I make money on these videos. Also, thanks for being a subscriber. If you are one, I really appreciate it. Also, viruses tend to spread easier in drier climates, such as during wintertime. So it's very possible that we could see restrictions put back in place later in the year. At this point, it doesn't seem likely that that will happen, but we are kind of in unprecedented times. So it's hard to say exactly what will happen in the future. Based on the 6 to 12 month projection, that means that the cruise lines will need to also have 6 to 12 months of liquidity to be able to pay their bills and avoid bankruptcy. This is the second factor I want to talk about, and that is liquidity and risk of bankruptcy. So let's take a look at the 3 largest cruise lines, Carnival, Royal Caribbean, and Norwegian, and see how much cash each one of them has, and see if we can determine how long they can stay afloat based on their current cash burn. Based on my research, I must say I was pleasantly surprised. Despite cruise lines not getting any federal stimulus money, it looks like all 3 cruise lines have enough cash on hand to last somewhere around 10 to 12 months without any revenue coming in. The cruise lines have been able to do this through a combination of reducing expenses and raising capital. Carnival, for example, has been able to raise $6 billion through new debt and equity offerings, and Norwegian Cruise Lines just recently raised an additional $2.2 billion to bring their total capital up to $3.5 billion. which their CEO says should be more than enough to get them through the next 12 months. Based on this, I do think there is a much lower chance of bankruptcy for cruise lines moving forward because of all the money that they have been able to raise. So let's go ahead and take a look at some of Fidelity's research tools to see what the financial health of each of these cruise lines are. I have a Fidelity brokerage account in addition to a bunch of other free trading apps, but I do like Fidelity's research tools as they are a little more robust than those other free trading apps. So if we scroll down and look at the fundamental analysis section, we can see 4 categories that are evaluated for. The 2 we are going to focus on right now are the valuation and the financial health indicators. These numbers are updated daily by S&P Global Market Intelligence, so we know we are getting the most accurate and up-to-date information and analysis. Let's start by looking at the financial health of each company. For CCL, we can see that they have a score of 95 out of 100, which is really good. Royal Caribbean scores an 82 out of 100 and Norwegian scores an 86 out of 100. Based on these numbers, it looks like Carnival is the best prepared financially to weather the coronavirus storm, but Royal Caribbean and Norwegian also scored pretty high. So far things are looking good when it comes to the financials of each of these 3 cruise lines. Next, let's take a look at the valuation of each of these 3. Carnival scores a 54 out of 100, which means it is a tiny bit undervalued at the moment. Royal Caribbean scores 75 out of 100, which is a lot better. That's a lot closer to the undervalued side. Remember, 100 is undervalued and 0 is overvalued. And Norwegian scores an 81 out of 100. So it looks like Norwegian is the most undervalued, followed by Royal Caribbean and then Carnival. So that's the fundamental analysis part of the equation, which is always important to look at when you are making investment decisions. The third factor for planning your investment in cruise line stocks will be predicting people's willingness to actually go on cruises when the cruise lines do resume operations. And this one I don't think will actually be that big of an issue. I spent some time watching videos and reading articles written by cruise blogs while doing research for this video, and a lot of the comments surprised me. There were comments from people saying that they were upset that their cruises in June and July were being canceled. So clearly some people don't care because they love their cruises too much. Also, don't forget that people were still going on cruises all the way up until March, when the no-sail order was issued. That was around the same time that cruise ships were reporting hundreds of coronavirus cases, yet people were still willing to go on cruises. And I am convinced that there would still be people going on cruises right now if it weren't for the no-sail order being issued. So for me, I've come to the conclusion that people are just playing crazy. And they will keep going on cruises no matter what, because life is short and you only live once, or something like that. For me, I have never gone on a cruise and I won't be going on a cruise anytime soon, but for some people they are a great way to have a nice vacation on a budget. I think it's important to separate how you feel about cruises and to really try to see how other people feel about cruises, because that's the most important factor here. So don't underestimate people's willingness to go on cruises when they do open up. Okay, enough on that, let's move on to the next point. Based on all of this information, I think investing in cruise stocks is a reasonable long-term investment right now. And really treating this as a long-term investment instead of a short-term investment is key, because I expect the big 3 cruise line stocks to trade relatively flat for the next couple of months before we see a big price movement. And this price movement could be positive or negative based on how the factors I mentioned earlier play out. So let's talk a little bit now about some different investing strategies you can use for investing in these cruise line stocks moving forward. The first option is to not invest in them and instead direct your money towards other investment opportunities. The second option would be to buy a large stake right now or sometime soon and wait for a large price increase. And the third option is to slowly dollar cost average into one or all 3 of these cruise stocks as you wait for a recovery. The main benefit of dollar cost averaging is that it will lower your risk, but it could also potentially lower your return as well. Dollar cost averaging is simply spreading out your investment over a longer period of time and buying on regular, scheduled days, regardless of what the price is doing that day. Buying larger positions of a stock tends to work best in a rising market, where dollar cost averaging tends to work best when the market is falling. Let me show you what I mean. Okay, let me get this. Hold on, let's see. Let's grab this. Okay. Let's grab this. Sorry, this is kind of crammed up here, but let me show you what I mean. So, let's say that let's do like, Carnival, for example. Carnival, right now, let's say it's trading here, and you put $2,000 in right here. So, in a rising market, the price of Carnival might just go straight up, which means that you're going to get the most benefit from putting your $2,000 in today, right down here. Now, if you were to dollar cost average and the stock of Carnival was to go straight up like this, you might put in, instead of $2,000 down here, let's get rid of this, instead of $2,000, let's say that you put in 200, and then you put in a week later 200, and then you put in another week later 200, and you do this 10 more times each week or maybe every day until you get up to the $2,000. So in a rising market, your average cost basis is going to be a lot higher than if you would have put in your total $2,000 all at once at the bottom. Now, the reason I say that it lowers your risk but hurts your returns is because you don't know what the stock price is going to do. You don't know that it's going to go straight up. And that's where we can get into another scenario. So if I get rid of this, let's get rid of that. So let's say that instead of putting in all your money down here, you dollar cost averaged in. But let's say that the stock price goes like this, and then it comes up, and then it goes down, and then it goes way up. Okay? So dollar cost averaging in means that you might buy here, and then you might buy here, and then you might buy here, and then here, and then here. And as you can see, it lowers your risk because there's always the option that when you dollar cost average in, that the stock will fall further and you'll actually get a better price than when you initially bought it the first time. So that's just something that you need to keep in mind when you think about investing. Are you going to dollar cost average in? I don't think it's a bad strategy to do that because, like I said, I think the chart for these cruise line stocks is going to be trading relatively flat for the next, maybe 3 months probably. And the price is probably going to go up and come down, but it's just going to be going like this before we see a big spike, hopefully up, after all this coronavirus stuff is over with. So I think as you get some money, go ahead and just probably dollar cost average in over the next couple of months, maybe every week. Throw some money at Carnival, at Norwegian, at Royal Caribbean. But if you have a high risk tolerance and you just want to try to maximize your return, go ahead and drop all your money in on one day and then just let it ride. Like I said, for the next 6 to 12 months, I think that's really where you're going to see the biggest long-term gains from buying these cruise stocks. So that's just a quick thing I wanted to point out and show you guys the difference between dollar cost averaging in and buying all at once. And it just matters when it comes to risk and return. Dollar cost averaging in is going to lower your risk because you have the possibility of buying it at a lower price in the future, but it's also going to hurt your returns if Carnival goes on a huge, 50%, 100% price run up. So let's start talking about the total possible gains that we can expect over the next 12 months. If we look at Carnival stock, a return to January's high price around $50 a share would be roughly a 300% return based on today's price. And it will most likely take a minimum of a year to get there. But it could take as long as 3 years or 5 years. I mean, who knows how long it's really going to take. But it's probably going to take anywhere from 1 to 3 years, in my opinion. And this is really where you have to decide if this is the best place to park your money for the next year, or if there are better returns available out there. And this is something that I talk a lot about on this channel. It is opportunity cost. You have to look through and decide, is it worth the opportunity cost to park my money in cruise lines for the next 12 months as opposed to going and buying shares of another company? A benefit of holding for at least a year is that you will get preferential tax rates when you sell. So it might be best to try and hold these cruise line stocks for at least a year. That's my advice, guys. I hope it was helpful to you. If you guys want even more stock market analysis and investing ideas, make sure to subscribe and watch some of my other videos. Thanks for watching, and I'll see you next time.